Hey folks, Dan Frio here, the rate update. Today is October 5th, 2021. It's October already. I just got back from Florida. Rates didn't spike while I was gone, but they're having a pretty bad day today. So we're going to go over that and more next, so don't go away. Okay, so talking about rates, what's going to happen when rates go up to, say, 4%? Well, check out this information from a lady who just wrote a book about this. And when we come back, I'm going to go over a bunch of questions that you might be asking after you see this video.
Well, we are concerned that the housing market is too hot, and we think that rising rates will definitely dampen demand. It's very disconcerting to think what the housing market would look like if mortgage rates were to rise to as little as 4%. A 30-year fixed rate at 4%, we think would arrest the market, and we would see a significant slowdown. And that's really due to, Melissa, the fact that 2/3 of mortgage holders in the United States have a rate locked in below 4%. So rising rates are really going to impact, I think, overall demand, and the free money party train might be coming to an end.
Ivy, on the high end, which is obviously an important part of the housing, will it have the same effect to those participants?
Actually, I think that it's worse for the high end, frankly, because I think as rates rise and more people are disincentivized to move. So, the same stat, if you look at those people that have a mortgage rate below 3.75, it's 54%. So think about all those people that were fortunate to lock in below 3. They're not going anywhere. So the move-up market will feel it more so, and the second home market will also start to slow. So we think the high end or move up and second time move up and luxury will be more impacted. The affordable product, I think that today home ownership is still a preferred long-term way to build wealth. And I think monthly payments right now are up in the double digits, was really just attributed to all the home price inflation. But I do think that it will dampen affordability for those trying to buy their first time home. But that's where the demand is the strongest right now.
Okay, some great feedback there. And what kind of confused me a little bit is when she was going through and saying, well, 75% or whatever her factors were, the people have a rate below 4%. So that's probably going to prohibit them from selling their house. Maybe, maybe not. If you're looking to downsize, I'm at a 2.5 30-year fix right now. Does that mean I don't want to downsize, in the next 3, 4, 5 years if my rate's going to be 4 or higher? No, I'll still save a ton of money because my mortgage will be that much less. Or you got a substantial raise and you now can't afford that higher payment. You pay a payment. You don't pay a rate. So let's say the payment's affordable. Okay, unfortunately, let's say the rate's 4 and the rates years ago were 2.99. Well, okay, you can't live in the past. I think you get where I'm saying. Or you live in a condo and now you had your third kid and you have a dog and you can't fit anymore. Well, your rate's 2.99. That means you're not going to move? No. And then on the other side, the very high end scale of these things is a lot of the people on the high end scale, the rate at 3.5 versus 4, is that going to stop them from buying a home? I don't think so. So some of the things there are somewhat debunked. But what I want to talk about today is the process of buying the house. Okay, the first thing is you're probably sitting there and saying, okay, I'm going to Google something or figure out where I find a house. How do I get qualified or whatever? Let's break it down into its simplest terms. Okay, the first thing you got to do is work with somebody to figure out how much you can afford. Okay, who cares that, you want a condo or a townhouse or a 2-unit building or whatever, and this and that, and where you're looking, that it's irrelevant at this point. If you can't get it, then you can't get it. We need to find out and say, yes, you can afford that. All right. So the first thing you need to do is talk with an educated, experienced loan officer. Okay. A lot of the companies that you're just going to click through, they hire basically minimum wage people to be data entry people. And I'm not debunking anything. I've done this 33 years. I've been around the block and I've had people, in my stable that were just order takers. And then I have very educated people in the background that can sit there and analyze the loans. If you're looking to buy your first house and you're looking to spend $200,000, $300,000, $400,000, you better figure out what you're getting into, and you better look at getting a consultant that can really help you. So some of you guys might say, Dan, great commercial. Well, yeah, but I'm just telling you the facts. If you have $250,000 to invest, are you just going to go to Joe Blow's investment company and give them your 250 grand and say, good luck, guys, give me the best returns I can? Or do you want somebody that knows the markets, knows what they're doing? Okay. So that's the first thing. You need to make sure you're working with somebody who can answer all your questions, who has the facts and the experience behind everything. Otherwise, you might not get your loan approved, and you could have. You might not be in the right program, and you could have been. And there's a whole bunch of pieces of this puzzle. Also, there's a lot of things behind the scenes we can educate you, or at least give you a hindsight of saying, you know, mate, you might want to look at this or consider this. For example, there's an article today about real estate taxes. All right. So this is a piece of the puzzle that can really throw havoc on your loan. All right. States with the highest real estate taxes. Look at the first one. $5,000 in yearly taxes on that property. But let's go all the way to the top one. And unfortunately, you're going to see Illinois in second. But look at the New Jersey. $8,000 in real estate taxes. Well, a lot of people, when they're calling for the first time to buy their first home, don't really realize part of your housing payment is real estate taxes. Well, did you realize that one that we just looked at in New Jersey, that would add $700 a month to your payment? Okay. I always preference by saying, please, because we're in Illinois and we have the second highest real estate taxes in the entire country. Please, when you're looking at your real estate tax, where you're looking at a home, please pay attention to the real estate taxes, because you could be looking at a house that's $3,000 in taxes, or one kind of similar and it has $7,000. Okay. A big difference. Okay. An extra $300 a month that it would cost you. So there's all the pieces of the puzzle that get put together that can really make or break you buying a house. All right. So let's start kind of back to where the beginning on this thing. Why I started this video is because everybody's asking about it, but it's also when you look in the complete homebuyer's guide, what are you looking to do when you're going to get started, look at budgeting, find a home, and so forth. So let's break it down. And hopefully you saw my Loan Depot post the other day where they have some major lawsuits coming their way. All right. The first thing before considering, what type of home suits your needs? Do you need a condo, a townhouse, a 2-unit building, a single family home on a corner lot with a fence, things like that? That's what you have to determine. These are things we're also going to talk to you about. If you buy a condo, you're probably going to have an association fee. You wouldn't have that if you had a single family home. Okay. A lot of people don't realize that. What specific features do you need? Okay. That's up to you guys. But again, we can kind of walk you through some of these things. What size of mortgage do you qualify for? Do you know some loans might have a lower rate than others? Like a jumbo rate has a higher rate in many cases than in normal, conventional loan. Your PMI factors, if you don't put 20% down, you need PMI. Is it better to go with an FHA loan or a conventional loan? These are the things that we can educate you on. What kind of home can you afford? How much do you need to have in savings? Okay, we can go through and tell you every program, how much do you need? It says 3.5% to 20% down. Well, they didn't even say in here, well, if you're a veteran, you need 0. If you're a first-time home buyer and you're doing a conventional loan, you only need 3%. So this information's even inaccurate, okay? But the home buying process is going to be pretty simple. Find a home. Well, they have that as number 1. That's not number 1. Number 1 should be figure out how much you qualify for. And how do we do that? Basically, you can Google it and you can do all these other things. I need you to call us, okay? And we're going to break down the numbers, the programs, all the facts behind the scenes to get you into a house, okay? We'll explain the programs, the percentage down, how the rate variations are different from this program to that program, how the PMI factors are different from this program and that program, how the debt ratio factors are different from each program. And if I totally confused you, that wasn't my point, but it is a valid point taken. If you don't know these things, you need to educate yourself and work with somebody who can teach you and show you each piece of the puzzle to make sure you're put in the right program. Okay? So this week is going to be basically a home buyer seminar week. Tomorrow, we're going to discuss 2, maybe 3 of the down payment assistance programs we have available to you that can give you up to 6% of the loan amount as a grant. Some of the grant needs paid, some grants don't need paid. Why, if you can get free money on one grant or the other one you'd have to pay back, why would you go with that versus the other? These are all the things that you need to be concerned with, and make sure you're working with a reputable person to make sure that you didn't take that grant that needs paid back when you could have gotten that grant, which is free money. These are all the things that we're talking about. Okay, so now why are you here? Mortgage rates. Okay, what's going on today, guys? I don't know. There is no economic news today that calls for this, other than they knew I just got back from Florida and rates did okay last week while I was gone, so they wanted to kind of throw a debunk right now. For those new out there, it seems I go to Florida probably once a month or once every other month. I have a property down there as well, and I go down there on long weekends. Every time I go down there, it seems like rates just spike. Okay, so that's the joke behind the scenes. But right now, here's why people follow me. They want to know, Dan, they ask, Dan, what's going on with mortgage rates? Well, this is what I follow. This is what I educate people on a daily basis. What we focus in on is this number right here. This is what's happening to the price of a mortgage-backed security. Okay, a mortgage-backed security is basically this. It's the bond that trades on Wall Street that is the biggest component or the biggest factor in your mortgage rate. So what happens is when the price, and that's the number we're showing here, when the price goes down, it drives up the rate, your mortgage rate. Okay, so we love when this number consistently goes up because it's dropping the rate. So there's an inverse relationship there. This is going down 28, means the yields or your mortgage rates are going up today. Okay, so this is what happened in the last quarter. And you can see it's not as gloom and doom as everybody makes it seem. Look where we were at the beginning of the quarter. Look where we are now. Okay, we're flat. We went through this and this and this. It is not Armageddon. You know, the world's not coming to an end. Yes, rates will get to 4% in the next year or two. It's going to happen. And if you can debunk me down below and say you're crazy, rates aren't going to move or whatever, guys, they're moving. And I'm going to show you that here in a second. But so that's what's going on right now with this. The trend right now is all over the map. And what do we have going on right now that's really causing a lot of headaches? Well, there's a lot of stuff going on. The biggest thing is the news. You know, the federal government, are they going to default? Okay. Or are they going to raise the debt ceiling? Okay. They're not going to redo the budgets because they just keep spending money. They don't really care how much they're getting in taxes. They'll say, well, we're going to raise taxes. Well, it doesn't even cover the spending that they're doing now. So there's a deficit. And so they're going to raise the debt ceiling. You got that going on. You have other news that really plays into the markets. You got the Facebook thing. You got the world, the Russia, China, Afghanistan, all this other stuff. You have the Federal Reserve. Well, Federal Reserve Chairman Powell is up for re-election soon or appointment by the president. Is he going to get appointed? Elizabeth Warren says, don't appoint him. Could somebody have done better? I don't know. But I mean, it's just all this stuff is compiling right now. You have the market one day, stock market down 500 one day. Next day it's up 500. That's not normal, guys. So you have all that going on. You also have unemployment numbers in. You have the Delta variant and everything else. It's a really complex market right now. Right? So that's what's going on right now. So the trends right now are, we bottomed out, but we come right back to where we started the quarter at. Okay. So that's out. What's today's whole day look like? We started out of the gate and crashed. Then we started stabilizing and we dropped again. Okay. But if you look at the economic calendar, there's nothing here. Non-manufacturing numbers. Tomorrow's the ADP payroll report. They're always wrong, and they're notoriously wrong. What do they think is going to come back? Well, they think there's going to be 430,000 jobs created. The Federal Reserve is looking to get in the tune of 1 million new employees or jobs created each month. And then you have the jobless rates coming in Thursday, and then you have the unemployment rate. So between tomorrow and Friday, there is a lot of data coming in. So the only thing I can think of is the markets are anticipating this news to be terrible, but only time's going to tell. Tomorrow, I'm not going to pay any really credence to the ADP payroll number because they're never right. Okay, so now where are rates? Okay, guys, I post this on a daily basis. Why? And these aren't even my rates. So why would I post them? You can get a trend of what's going on, or you can at least get an idea. Okay, my rate's this, or I got a quote at this. Let me ask you this. Do me a favor. If you're in the mortgage process right now and you got a loan estimate, send it to me. It's going to take you 2 minutes to go click, 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 and click. My email address is dfrio. My name is Dan Frio. So it's dfrio, Frio, at preferredrate.com. And it's even down below in the description. Send me your copy of your loan estimate. Let me mark all over it in red pen and tell you what I can do. Probably 80% of the time I beat the competitors on rate, B, or C, all the above. Sometimes I can't. I'm like, God bless you. Take with what you got, close on it, don't look back. But all it's going to do is take you 2 minutes of your time to send that to me and another minute to review my results. Okay, so that's that for that. But let's get on to where rates are throughout the country right now. So Black Knight does a survey every day through a huge amount of lenders throughout the country, and they say, what's your rates? Okay, generically on a 30-year fixed. So 30-year fixed conforming, jumbo, FHA, and VA. Here's where they are. 316, 312, 320, and 276. All right, what changes have they made? Well, the 1-day delta means a 1-day change, a 7-day delta, 7-day change, and a 4-week delta, so a month change. You can see not really doing anything in the last day. Well, you're going to see it tomorrow because the number that's reflective right here, and when I started the video, we were down 22. Now we're down all the way to down 30. So not a good day going on. So what you're going to see is these rates raising a little bit, as you can see on the 4-week delta. Okay, so over the past month, we've seen rates go about 1/8 higher across the board. Okay, so rates are going up. To debunk those that are saying, Dan, rates aren't going anywhere. Well, there it is right there, guys. Okay, so I'm just giving you the facts behind the scene. All right, so again, these are not my rates. These are rates throughout the country. So 3 basis points means, just to clarify that, 3 basis points, 0.03 is the differential here, okay? So for example, let's say take the FHA rates, 3.2 right now. It's 3 basis points higher than it was yesterday. Well, that means yesterday was 3.17. Hope you get it. If there's a parenthesis around it, it means it went down, all right? So the VA, there's no way the week or the past week, the VA went down 10 basis points, but I'm not debunking them. This is Black Knight's information. It is not my rates, and that's where they are. So all I ask you to do is please just do me a favor, take 1 minute of your time, give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. How do you find out more about me and my team? Well, pretty simple. I just need you to go to therateupdate.com. And this is what you're going to see. All right. And there's a whole bunch of tools up here that can help you. Looks, for example, buying a house. How much would it cost you? What would your mortgage payment be if you asked for something specific? Okay. Well, thinking of asking for something specific, what would it take for you to refinance or use me as your lender if I got a specific rate? So how do you do that? Well, just click here. This will pop up the first time you come to the website and say, okay, for us to do, what preferred rate are you looking for? All you need to do is click here and answer the questions. Dan, I'll refinance if I can get 3.5 because I'm at 4.5 now, and just put in your criteria. What'll happen here is you'll put in this information. I need it because if you know anything about how mortgage rates operate, all this information is relative. So we'll plug in the system. If and when that rate hits that you're looking for, I'll reach out to you immediately and say, hey, it's there. Let's move on this. But if you have any questions that we can answer, please give us a call at 844-775-LOAN right there. Or you can apply right online. Click there. It's a really simple process. It'll take you about 10, 15 minutes. Don't drive yourself nuts, but do the best you can. Or what most people are doing, they're like, I want to talk to somebody. Can't do it right now. I want to schedule an appointment. What times do you have available that we can talk? Well, it'll open up the calendar. Once the calendar is open, you pick the day and time of your choosing. And then you also tell me, how do you want to do it? You want to do it by Zoom or by phone? And then that day at that time, we'll be reaching out to you to answer any and all questions that you got. So that's it for today, you guys. Sorry it was a little lengthy. This week is going to be educational on how to get you into your first house and the best ways to do that. So God bless, guys. Thank you so much for watching, and I'll see you tomorrow.